And joining me now in studio is Reko Nare from Anchor Capital with his take on what's playing itself out in midday trade. Thank you so much for your time, Reko. I must say, it's quite a pleasant surprise to see all these news coming out of the JSE because it had just been global macroeconomic news, but we do have some company news out today. But just starting off there with the macro, we did have the US markets last night bothered by comments that came out from Fed Chair Jerome Powell. What exactly induced those jitters?
Zinati, thanks so much for having me. It's great to be on the show and it's great to be in studio. I would say, to answer your question, that it's really around the global GDP and global growth story. So I think that's really what investors are focusing on now, because we know that global growth and growth as a whole has a big driver of earnings per share. And a big drive in earnings per share obviously has a big drive on share price moves. So essentially what the concern is here is around the global growth picture. If you think about the fact that, you've had GDP forecasts being ratcheted down, we had, for example, the likes of JP Morgan starting the year within South Africa, for example, starting the year, with about 2% GDP outlook. That's been ratcheted down to 1.3% at the beginning of this month. And now we have the Reserve Bank coming out and saying we might contract by 0.7%. So really it's a question of the global growth picture, and essentially when Jerome Powell and the likes of Jerome Powell and central bankers come out, it puts the question of the global growth picture at play, and puts a big question mark on the global growth picture as a whole.
Yeah, indeed, it's quite interesting because, they had kind of adopted kind of a more hawkish stance than we had seen, for example, towards the end of last year, where it seemed now that we wouldn't be getting any interest rate cuts. But if global growth then starts slowing down, particularly in the US, then they might need to kind of change their tone. But as I said earlier on, it is a wait and see approach, and we will have to see from more data that comes out of there. Well, let's get into the company news that came out of the JSE. We did have BHP coming out with a 9-month operational review. They had me at record copper and iron ore production. So just talk to me about that update and what's really characterized it.
So I think from my side, just as a general overview, if you think of the fact that this is the world's largest iron ore producer, iron ore, as you already highlighted right at the beginning, that contributes about 50% of revenue. And of course, 62% of that comes out of China. So if you think about the fact that, the fundamental underpin here, and I say that, as a holder of BHP, we've been a long-suffering holder of BHP through its peaks and troughs. But essentially, this production update does read very well in the sense of you had, copper production up 10%. You had iron ore production down for the quarter 7%, but flat year on year. And then, as you said, you had a year-to-date record, and that year-to-date record looked at like 192 metric tons of iron ore. Meteorological coal that did kind of weigh on this production update. But if you just think of sort of the weighting, I think it is fairly constructive. And if I just take a step back as an investor, you're thinking to yourself, if China does come and support its own economy through stimulus, then that should be constructive for the basic materials. It should be constructive specifically for iron ore demand, and it should be constructive for the share. So that's what we're waiting for, to see that stimulus out of China.
Yes, and quite interesting, obviously, as we had the first quarter GDP surprising to the upside there in China. And hopes coming through that because exports might be halted, that the government can do more to support the consumption, domestic consumption there in China. Another diversified miner that came out with an update is South 32. A number of production highlights there, even in Mozambique amid the civil unrest. Quite a good outlook as well, saying that they expect guidance to be maintained almost across the board. So what stood out for you there?
So not as constructive a production update as BHP. You are seeing the share price down about 0.4%, so call it flat. But if you take a step back and think about the fact that the share price is down about 20% in rand terms year to date, investors have certainly stayed clear here. But just extracting some of the comments there, you had a production miss on expectations. You had a halt on the Australian manganese production, and that was largely because of Cyclone Megan. You remember that is something that played through within these 9 months. And then, of course, you've had, as you said, guidance held steady, except for Cannington, which is the part of the production that they say, is basically cut by about 10% due to geotechnical issues. So, I guess, a lot going on here, a lot at play here, something for the Bulls, something for the Bears maybe. But the fact that they've got, net cash rising by about $252 million, that should be constructive, as far as just having a cash pile. But from our side, when you look at it from a valuation perspective, if you think about the fact that they're sitting at a 9.5 times PE, consensus is about 10.2. So if you just play it on a pure valuation, there could be some upside here for a value investor.
An interesting comment there, something for the Bulls, something for the Bears. And what's surprising me about Sasol is that looking at that update, I thought it was all for the Bears, but looking at the share price, that's been quite bullish. So they also came out with a 9-month production update, basically hit by a double whammy of macroeconomic challenges that are affecting their margins, but also internal operational challenges there as well, seeming that the bright spot, and I don't know how big it is, was the chemicals revenue in the last quarter of the 9 months. But I don't know, is there anything fueling that performance at this point?
You said very well there, Zinati. So I think if you think about the fact that, the share price, call it flat again, positive 0.2% today. That doesn't scream constructive in the sense that you're not seeing investors rushing to come and support it. And if you think about the fact that the share price is down 26% year to date, that's quite a big number. Once again, take a step back here. We bemoan this because this was once one of the darlings of the JSE. So to see it here it brings some tears, but if I can just extract, as you said, from the actual update itself, they kept guidance largely in line. In other words, guidance was largely retained. There were delays in the NatRef, and then there were also delays as far as the US cracker business and plant is concerned, which of course then lowered fuel and then lowered chemical sales expectations. So I think that's where you're getting hit, and I think that's where investors are then looking and not being or exercising a rather constructive view on the share. I think for long-suffering shareholders here,
and there are a lot of them.
I think the hope here is that specifically within the chemicals business, that there is some murmurings, some whisperings of a private equity player that might come and take it off. So I think that's what some long-suffering investors are hoping for. But I think you just continue to wait and hold here in this specific environment.
All right. Well, Reko, before we get to your stock pick, let's reflect on some of the counters that have found favor with your industry peers.
So they're an exporter. What company is exposed to the reform agenda in South Africa, and what company will also pay me a really nice dividend if I wait for a recovery? And Renet just popped up quite naturally. The stock is on a 7% forward dividend yield. It's trading at a very low multiple. They're exposed to the reform agenda in the form of renewable energy and the transmission requirements from Eskom space, and they're an exporter of defense products. So, it just kind of lands quite nicely for me.
Yeah, so LVMH also a stock that's come back very nicely. So it's actually incredible. I think it's down around 35%, almost 40% from highs. And I think we're starting to see this as an opportunity. It's not one that we hold in portfolios at the moment, but it's certainly something that we're seriously considering. They've had a little bit of a difficult set of results now, which has sent the stock down even further. But a lot of that impact was actually coming from less Chinese shopping in Japan and quite a high comparison base as well. So if you look at the US consumer specifically, they've seen no deterioration there. And I think, again, you're looking at luxury goods, and this is one of the premier luxury goods groups globally. They are actually fairly defensive. They manage to maintain higher margins. Usually some of that more aspirational brands, they will take a knock, under a tariff regime. But often these are the kind of goods that do get exempt, or at least, the demand remains quite static, and the type of consumer buying them is also can kind of almost swallow price increases due to tariffs. So I think maybe a little bit too much concern around the group, sending the share price low and starting to look like an opportunity for me.
Well, very, very interesting stocks there. Let's actually start off with LVMH. Of course, we did get some numbers out from them this week, and they took quite a knock. And I don't know if I should say Gary is being brave there, or yeah, I don't know. What's your take? Because it seems that that consumer segment is also not immune to the global economic challenges.
Yeah, I think Gary's being very brave. But I think just to qualify this, I think we are holders of LVMH.
Yeah.
But when you just extract what you saw from that trading update from LVMH, disappointing across the board.
Yeah.
You had broad misses. You had a 5% decline in that core fashion and leather goods segment, which of course accounts for about 75% of operating margin. And then of course you had the fact that you had them stating that there's been this massive slowdown within China. And if you think about the fact that China accounts for about 75% of that weakness that we saw, you know, I think there is a big question mark on that. We did listen to the call, and the one thing that management did say that did, I want to say, concern us is the fact that, you know, they expect or rather they don't expect any margin expansion within the first half of 2025. But with that said, you know, it is a very well-run business.
Yeah.
But from our side, we're not rushing. We're kind of holding ourselves back to kind of be adding to this position at this point in time.
But still holding.
But still holding.
Yeah.
Happy to continue holding at this point in time.
Okay. Well, we won't get to ruin it, but what are you buying? Your stock pick for today?
So my stock pick, Zinati, is going to be ABSA. Certainly, I think that's fairly vanilla, if you will. I have come here before and you know, pushed ABSA.
Yeah.
But essentially, for me, really the picture here is one of the fact that, you know, SA equities look cheap, and financials have lagged due to the macroeconomic uncertainty and weakness in sentiment. But with that said, you know, you've got such great value within specifically our financials and specifically within our banks. If you think about the fact that, you know, ABSA trades on a 5.5 times PE, it's got a 0.8 times price to book. We have an expected return on equity of about 15%, and we have about 9% earnings growth as far as just EPS is concerned. So 9% compound annual growth in EPS. So we think that, you know, to put this all together, you've got a 10% dividend yield within this share. I think it's a massive value, especially in a time when South African investors are hunting and searching around for value. So it's a bit of a no-brainer. ABG on the JSE, ABSA.
And indeed, I mean, a lot of people have been choosing ABSA on the stock pick segment, so quite a firm favorite there. So maybe you should be following the choir. Thank you so much for your time and for coming to studio, Reko. That was Reko Nare from Anchor Capital.